Just doing a quick sound check. Let me know everyone can hear okay. Awesome. Thank you, folks. We'll get going in about 2 minutes, folks. Welcome everyone to the Kindle Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share those videos. And this will be an exciting night. We are going to do some individual stocks as I promised. And So I will ask you for some of those. So the early bird gets to worm. Those of you that are here get to make a choice. So drop some stocks that you'd like me to cover tonight, and I will do that. I'm only going to do about 10 stocks. I'll see how fast I get through them, actually. So I just want to keep this stream tonight down to around an hour or a little less. So we've got a lot of things to talk about. And one of the things that seems to be coming into focus here, the infrastructure deal continues to be kind of flaunted around a little bit. And they actually came up with kind of a non-binding agreement. So Pelosi has a way to screw anybody she made an agreement with if she wants to change it. So it seems to be the way that government works anymore. And it always has. Actually, it doesn't matter who the administration was. But we're just seeing a continuing of this noise. Now they're talking about a September 27th vote and all that. I told you folks probably 2 months ago that this is just going to be a drawn out mess, and there's going to be a lot of, I guess, shuffling of the deck as we go through. Yesterday, we printed 4,500. I talked about that last night. We had a good chance of printing the 4,500 handle on the S&P. We did that. S&P ended up plus 0.2, NASDAQ up 0.2, and the Russell up 0.4. So I'll be going through all this stuff in the technicals here in a few minutes. But as we come into today, speaking of Thursday, when we come into Thursday, the initial claims are going to be looked at for about 345,000 new. Continuing came in at 2.82 last week. That number continues to decline. That will be actually a positive. And then we get the second revision of GDP tomorrow, expected to show a 6.6% gain. And then the deflator is really what my eye's on, is just seeing how that number moves around. That's really our inflation indicator. That's expected to come in at 6%. So we'll see how all those numbers come out. And we're just going to be, after tomorrow, will be 1 day away from the Jackson Hole announcement by Powell. Like I said, I won't be able to cover any of that action until Sunday night, which I'll go through details on whatever he has to say on that, and we'll see how the market impact goes. I am not going to be able to come up live on Friday. I'm just crazy booked right now, and today was probably one of the more crazy days I've had for a while, literally running. That's why I was a few minutes late getting started tonight. Also, as we look forward to Friday, I'm skipping today because I don't think there's going to be a lot going on ahead of that Jackson Hole meeting. We'll probably just continue this grinding that we've seen, but the PCE price index will come out, and that's expected to be fairly hot, around 6% as well. So that's really all the rest of the week. We still have a few earnings coming out. Not sure anyone really cares about that at the moment. I want to talk about something here. We did see, and I've been talking about, the 10-year starting to move higher again. It's doing that. We're printing some decent numbers there as far as the yields coming back up. And I want to talk about something that is a lot of scuttlebutt around the street. Let me just bring this up real quick. I thought I had it on the screen when I brought this up. Is the repos, the reverse repos that are going on. And there's a lot of people talking about this, that this is something material. You see the big spike, and they're talking about it being unprecedented. But what we've seen, if you just go back to a year ago, we've seen the Fed's balance sheet expand substantially. And we're looking at about almost $1.2 trillion worth of repos coming out. And this is, I will call it, a shadow tightening. The Fed isn't going to do anything really visible, I don't think, in Jackson Hole presentation or anything that's going to rock the boat, so to speak. We're just going to continue to see these repos actually controlling some of the flow. I talked about this a number of weeks ago. A lot of folks think this is material. It is not. If you look at the size of the spreadsheet, and going back to an old guy like me, which has been a Fed watcher for a long time, you go back to 1980, when interest rates were 16 to 20%, they were doing a lot of reverse repos, and they were doing another open market operation called basically where they would sell all bonds. They would open up the discount window and they would sell bonds into the market. The bank, they would take money out of the banking system. The banks are forced, the primary dealers and others are forced to buy these securities when they're doing that, and that's what's happening here. So they're pulling $1 trillion out. Sounds like a lot. The excesses in the market, there's some seasonal tendencies that go on. So I don't see this as material, but I do see it as somewhat of a shadow taper, if you will. And I don't see it getting much bigger. If it went to 2 trillion, then I think I would be concerned. But at this level, we're really, really not there. So just everything that's going on right now. I mean, this is, while we're printing new highs, we're crawling that, what I call a creepy crawler. We're just continuing to basically move this market into a, this higher, we're moving in this slope, but there's no VIG. I keep talking about that. I know I've seen some comments on the channel when I say there's no VIG, there's usually a sell-off coming. It really doesn't look like that's the case at all. We are seeing some traction in database. I'll go through here in a minute, but I'm going to go through a fair amount of markets tonight, and I want to get through and do some of those stocks that you're talking about. So let's go ahead and dig into the database. We've got a fair amount to talk about on some of that as well. Bear with me, okay? So we look at the database, we did see 1,924 buy signals. We are seeing a lot of stuff come in to the financial sector, and this is also being influenced by a little rally, actually a sell-off in the bonds, but a rally in the yields as far as that goes. But we're looking at 1,924 buys, 599. So we basically had a 19-to-6 buy versus sell ratio. That's pretty positive. We're still below any of those key metrics that I talk a lot about. As you know, I talk a lot about this 42% level. So we're moving that way. We're moving in the right direction. We're getting more of the traction that is telling us that maybe we can keep moving. We're going to get through this 4,500 level. Everything seems to be pretty positive, and there's nothing really to jack the market around right now. Maybe Jackson Hole on Friday, maybe there's something there, but I don't see the Fed doing anything that's going to rock this boat. Everybody's quite comfy right now, and that sometimes is dangerous, but I don't see anything really material there. I did have one other perspective, and we go through the S&P here in a minute. I want to show you just about what's really going on here and why I think a lot of people, the favorite word probably on the internet right now is bubble, right? Everything's a bubble. And I don't think we're in a bubble phase just yet. Things are definitely elevated, all that, but it's too methodical right now to be a bubble. What I expect to see when we do get to the end of this market is we're going to see some really parabolic, crazy move that comes out of this thing, and then it's going to there's not going to be any oxygen left, and it's just going to turn around and go south. So let's go in and take a look at the S&P futures here. Couple things to look at. This is the daily, where it's almost embarrassing every night to keep coming up and saying there's no momentum increase. But look at these PPMs; they're just flat. They're not doing anything while we continue to climb up. The ranges that we're seeing, like yesterday, the range. Let me bring that on the screen so you can see it. The range was low 44.76, so we didn't even get to an S1. R1 was 43.93, so we did get through that. Almost got to R2, 45.05, but basically an S1, R1, a little above S1, and a little above R1 and a little above S1. So we just kind of traded in this range. And as we look at the overnight action right now, the futures are down 6 handles. So it's not any really big deal, but we weren't up much yesterday. I think it was up 9 or so. So we're really back and forth at the moment. We're locked in this range. We're seeing something else happen here that I want to point out is we're starting to see this contraction on the market grid, which usually isn't a good sign, but the support levels are actually 44.55, so 30 handles lower. It'd be about the extreme. I don't see us getting down to the 44.78 level is probably pretty solid support there. I don't see us getting anywhere near that 44.55 number. That number is coming up right now at about 5 handles, so it's going to be 45.60 tomorrow. So we're just looking at this thing continue to be right up where the STX number is. So if we did see any weakness, that would be the limits of everything. And like I said, we're a little bit vulnerable just with the contraction that's going on there. Let's go over to the SPX. SPX, you'll see this even more pronounced. The market, let me go back to the futures for a second because we didn't really mark out the expectations for tonight. So look at this right now. We've already printed exactly S1 44.85. That's the low of the night. And the R1 45.25. I think we'll print back up towards that. Probably another lackluster day, S1, R1. Not really seeing a lot more volatility coming in. And as always, these pivot numbers, if we trade through 85, then 78's the number. On the upside, we'll get through 4,500 and 4508 will be the number. So now let's go to the SPX. And the SPX is seeing the same type of configuration. We look at the market grid for tomorrow. We finished at 44.96, S1 44.90. We're probably looking at an S2 possibility of an R2 number for tomorrow, still very narrow. I don't see us getting much above or below those two numbers, so we should stay in that range. As with the futures, no momentum, no upside really pushing on this thing, so that's really where we are. As I've mentioned several times, I'll go over to the weekly chart. The real momentum that's out there is on the intermediate. That trend continues to be solid. It continues to be accelerating and also is at a pretty robust trend level right now at 76.76 on ppm1, 0.53 and 0.58 ppm2 and 3. All across the board is absolutely a solid uptrend. So there's just nothing here that's telling us the market's going to roll over. We're going to keep climbing this thing. I know it's boring. There's just not a lot of stuff going on in this market. But as I said, for the past several weeks, we just continue to waffle higher, stay in somewhat of a sideways range with a slight bias to the upside, and that's going to continue, I think, for a couple more weeks. And the expectation is not for the market to necessarily roll over, but possibly break out to the upside. And when we go through the interest rates, I talk about that again just a little bit. As far as the sectors go, I still think the financial sector is the place you want to pay attention. We saw some pretty good movement in the financials yesterday. I think it was up 1.3 or 4, and we're starting to see some breakouts, and it has everything to do with the treasuries going up. So before I go on to some other things, I want to show you something here, and I'm going to go full screen with this just so you can see what's going on. This is a quarterly chart of the S&P, and since I'm not doing these really long 2.5-hour sessions anymore, I don't get a chance to get into some long term. But this is an interesting chart. This is actually a log chart. It is not a linear chart, so it looks fairly normal. And this is why I'm going to show you a chart. This is why everybody is talking about the markets being in a bubble. And this is it right here. It's just a vertical move and literally going from the lows in 2008, with the exception last year we had one quarter. So this is every bar is 3 months. So it's a very long-term chart. I do have this plotted out as a fifth wave, but it looks like there's numbers above, potential above 4,600, 4,680. I haven't talked about those numbers for a while, but this is really, when you look at it from just a linear viewpoint, it's a crazy looking chart. And I get why folks are screaming bubble. And there's just things going on that is fairly, how's the best way to put it, fairly explainable in where we are right now. And what I mean by that is you can see all the metrics. We know what the Fed's doing. They're not going to stop doing what they're doing. And I know I've teased you folks. I haven't talked about it for a while, but I'm still working on this video, and it's really talking about this whole impact of MMT. What you're seeing right now is MMT. What you're seeing in the infrastructure bill they're trying to pass, it's a human infrastructure bill. So I remember when I first heard this, what the hell is this? Well, I saw Biden telling everybody, if you have children, I think under 7, whatever the age is, that you're going to get $1,250 a year divided by 12. So you're going to start getting money just for having kids. And I guess that's great. And I guess when I was a young father, I wouldn't have mind having some $1,200 a kid. That would have been helpful. But you know how far $1,200 goes anymore. But the point is, it's universal income. It's really starting in switching our economy from what we've been in a capitalist environment, like a neoclassical capitalist system, to more of a, we'll call it a social democracy, and you'll see this. I don't want to go into this, and I know people, this is not political, it's what's happening. The reason why everywhere you go there's a survey is because that's what the view of the world. They want, 43% say this, these guys say this, and everything is based on a view of a crowd rules kind of mentality, and they're doing this everywhere in society. I'm on LinkedIn. I have like 20,000 people on my LinkedIn following, and there's 40, 50 surveys a day. You go on every website that you want to go to, it's survey after survey. So the point of all this is that the MMT and what's going on right now is going to continue. I don't see this thing breaking down. The only thing that could happen is if there was some kind of true black swan event. And folks called 2008 a black swan. Well, if it was a black swan, how come I told everybody that what was going to happen to the banking system in 2007? There were lots of other people that were able to see what was going on. The Fed doesn't seem to get anything, and there just seems to be things out there. I don't really see any of those breaks in the system right now that a lot of folks talk about. So anyway, enough of that little bit of a rant there. But when you start looking at these markets, I get why everybody's talking about bubbles. Unfortunately, you'll be really disappointed if you're in that mentality. You're even going to miss out on the markets. And that's why, I'm an advocate of our quant system, having a process around everything you do. And that just makes life a whole lot easier if you have a process. So anyway, enough of my rant. So let's go on and let's go back to TradeStation. We'll take a look at the NASDAQ, and the NASDAQ just continues to move. This is the weekly chart I have on here. Weekly chart is trading almost at the extremes for the week. 15,409. We've been to 15,397. We're trading right now 337. So we're off a bit off of that high, but we're looking at the potential for getting above 15.4 this week yet. I think with the Jackson Hole situation, we could actually end up getting an RXT weekly sell on the NASDAQ, and all that means it's not a sell signal like the end of the trend. It would suggest we'd get even more consolidation at these levels with a slight upward bias. We look at the PPMs, we're on a weekly NASDAQ chart. The PPMs across the board, 0.88, 0.68, 0.64. If you're new to the channel, these PPM stand for price pressure momentum. What that tells us about the percent probability for the market to decline under the moving averages. And right now, all three of the averages have less than a 20% probability of declining below them. And that number, the minimum number, is 14,923. As I've told you, and last week I talked about this, we printed just under that number last week was 14,793. We printed down to 710, and the market reversed and closed basically on change for the week. But we're really looking at this thing following through to the upside. Let's go to the daily real quick, and we'll set up the PPMs for tomorrow. Like I said, a little bit of weakness, down 28 handles right now, down 0.18, no big deal. But we're looking at the market grid. We're trading right at S1, 15,333, 15,334 is the low of the session, trading 36. So we're right there. If we get through that, we could see an S2. That would be another 30 handles lower. It's very possible that we're seeing the bottom end of this range right now on the NASDAQ. R1, 15,395. We're a little bit below that. You can see an S1, R2 put us up at 429 on the daily. But the PPMs are a little bit stronger than the daily on the S&P, but not a lot. And they really don't have a lot of momentum here either. So I continue just to see this creepy crawler in this sideways range. Next, we'll go to the Russell. Russell futures right now are down 780. Let me just bring up the cash. Cash up 0.37. We're definitely staying above these averages that I talked about last night. So we're above the 40 period moving average right now, 22.23. There's a lot of resistance. I'll show you in a minute on the weekly around 22.50 or so. I'll get the exact numbers here in a minute. PPMs are starting to set up really good. So I continue to see the Russell doing well inside of this, at least this short-term configuration. On a weekly basis, we're very close. We get above 22.51. I talked about this last night. We finished the week above 22.51. And we're going to see more appreciation here. We're seeing the PPM starting to all turn up simultaneously, which once again is bullish in itself. So everything's set here for the Russell. So let's take a look at the spreads real quick. And the first chart on the left is the S&P versus the Russell. The middle is S&P versus NASDAQ. The middle one is the S&P, the Russell versus the NASDAQ, and the far one is the mid-cap versus the NAS. And the S&P has been the stronger of the group, but I think there is a little bit of switch happening. We're seeing a slight continuation, and I'll be telling you when I think this thing's going to rotate, but I believe that it's going to have everything to do with that breakout over that 2251 number. We get that, you're going to start to see that go. I think the key sectors you're going to watch for is primarily the financials are going to be the place to play. There may be further plays in the energy and some other things, but financials for me right now is going to be the play. I'm going to go through the 10-year next to show you a little bit what's going on in conjunction when I was talking about the reverse repos just a few minutes ago. So going to the 10-year next, we managed to print up to 1.34, and I've been talking about that number. That is sort of my magic number. This is the weekly chart right now. And everything's turning like I told you it was going to about 4 weeks ago. When we printed down to 1.2, I suggested that we would not go any lower. This thing would bounce back and we'd stabilize between 124 and 134. That's what's happening. And this is actually really important to the scenario I'm talking about with the NASDAQ coming back in play, seeing a little higher yields, not skyrocketing yields, but higher yields. And this has also everything with what the Fed's doing. I'll show you, we're going to go to the yield curve here in a minute, but everything the Fed's doing with the reverse repos, the 530s, and the 1030 spreads, the way they're positioning these purchases that they're doing. So it's very masterful. I've never seen in all my years such a, I guess, masterful approach from the Fed and very methodical in executing things. And it's very interesting. It has everything to do with the technology we have today. When I was flashing back when we were talking about repos back in 1980, it was very archaic. It was, hey, let's try this, let's buy this many. They literally, it's like, have meters on all the cash flows in the banking system, everything that's going on. They know exactly what's going on from second to second. And they know all the economic reports long before they come out, before the rest of us. They have the benefit of the insider information, and it's okay for them to use. And that's the way it's set up, right? Whether the Fed has a bit of an edge, they don't have, it doesn't look like to me anyway, they have as bad as lag as missing some of these events as they have in the past. So I'm really, I think, probably more intrigued with watching what the Fed's going to do in the next year or so and just trying to get a handle on that. But this weekly chart here is set up. We're seeing the PPM1 still negative. So there is some resistance right here at this 1.34 level. But if we stay above that, then we're looking at the potential going to about 1.42, 1.46. That will be the top end. And then we're going to fall into the grid. Let's look at the daily because I think that pattern is set up pretty interesting. We actually got an RXT sell signal yesterday, and what that means is we should get a couple days of sideways and it should stabilize here. So my expectation probably 1.29, 1.34, maybe print 1.36, something like that, but it's just going to stay there. So let's go ahead and let's take a look at the yield curve. So on a yield curve basis, what we're seeing here is, let me bring this up, give you a better, this is the 1030 spread. This has been very stable and so the Fed is wanting to keep this reasonably elevated right now. And this is actually really positive, this type of configuration, especially for the financial stocks, the banks, all of that. That is a real key type of configuration. If we go over here, this should be the 530. They're starting to stabilize this. So what that means, they're actually, what they want is the 30 to outperform. They don't want it to narrow. They don't want the 5 to gain on the 30. This would probably be better at about 1.3 plus, and I think they'll get it there. We'll see what comes out of Jackson Hole and see how aggressive they are to move it. They're okay with where this is at 1.11. They won't let it drop under 1%, and in my opinion anyway, that's not likely to happen. And this chart over here is interesting because this is the very short end. This is the 13-week. Again, let me just look at and give you exactly. I usually have these labeled. I don't. I just want to make sure I'm telling you the right thing here. Yeah, this is the 13-week or the T-bill versus the 5-year. So there's been a lot of flattening going on here, so that I think this will also start to steepen again, and that's going to give us a little bit of insight. And those purchases on the reverse repos and draining some money of the banking system, that's going to keep some upward pressure and stabilizing some of the really short yields. And that's why I want to see how this spread here actually
performs over the next several, we'll call it several weeks. And especially, I think after Jackson Hole, whether they make any kind of policy statement or not, I don't expect it, but they could make a little bit of shift. But I don't see anything, like I said, in the tapering type scenario. They're doing the shadow tapering through the reverse repos. Okay, so here's the plan. I'm going to do crude oil. We're going to do gold. I'm going to do the cryptos. I'm going to do Bitcoin and Ether, and then we're going to run through some stocks to see how we're doing on time. We're at about 30 minutes into the broadcast, so that should work out really well. Okay, so crude had a nice bounce as well. I really was pushing this scenario that a few days back, and it goes back about 6 days, that we would bottom somewhere around this 200-day moving average, but there's also some weekly numbers here that were substantial right at the $61 level. We hit 61.74. That was rock solid support. We've slammed back in, but we still have a little downward pressure. So my expectation is, as it was yesterday, for this market to drift back possibly around 66 or so, 66 and a quarter or a half, right in that range. We should see some stability right after that. There's not a lot going on here. I just wanted to bring it up because it's in focus right now. And the real interesting event that's happened is when we bring up that weekly chart, you'll see it bounce off the 200-week and the 40-week moving average. And that was the magic stopping point. The low was 61.74, the 40-week 61.28, the 200-week 60.97. So it's almost a perfect hit and reversal. And we've got the potential right now of doing an outside reversal on crude oil. I'll probably talk about this tomorrow night, because this reversal, what it would suggest is that we're going to get maybe 2 to 3 weeks of higher prices if we can close above really just a 60% level, which is going to put us, let me look at this very quickly, probably anything above around 66.48. I'll get an exact number for you tomorrow night, but anything above there on Friday is going to set the tone, give us an outside reversal pattern. And if you haven't seen this pattern, it's one of my classic trade setups. You probably want to go to the channel, and there's a video on a 3-day trade on Apple that I did last year. I'm not sure, should be fairly easy to find on the channel, but I describe all the setups in exact scenario that happens. It's a 3-bar setup, and it can continue to 5, but it's really, when that trade works, it's low risk and it's powerful and profitable. When it doesn't work, what's nice about it, it's low risk. You know, you almost get an instant exit when it doesn't work. So it's a good trade. Go back and watch that. I won't talk about it tonight, but that's something you probably should look at on the channel. Okay, so let's go to gold. Gold backed up a little bit, as I mentioned in last night's broadcast. And what I'm looking for here is it to stabilize basically where it's at right now. I don't see us getting below last week's low right now, which is 1772. I think that number will hold. This is the weekly graph. So we look at 1778 was the low. That was right in the range where I was talking about last night. I don't see the print at 1767. We should stabilize a bit here. We're seeing us not really call it a bid. We basically have been sideways. Let's go over to the daily chart here. Dailies have all that resistance. I've talked around 17 1795 is resistance. We continue to trade a little bit above, back into it. This is support now. As far as the daily chart goes, it looks like probably an S1, 1786. We've already printed basically an R1, but probably S1, R2 for gold for today. All right, let's get into the cryptos. Let's do Bitcoin. This continues to be a very interesting pattern, and right now there's a couple things going on with Bitcoin. This is a daily graph, and the 10-period moving average has an upward slope PPM right now 0.28, so it's in trend mode. PPM 2 0.97, PPM 3 0.95. So we actually have a solid uptrend going in this market right now, and as long as we can stay really above the 21, the 10 has been pretty solid the last couple of days. Yesterday, the 10 was 47,438, the low 47,614. We dipped below it just a little bit tonight, 47,572, 47,141, and now we're looking at the market grid for today, and you're looking at the upper end of the range, 49,046. We've actually been just above that, moving towards an R3. So as far as it goes right now, we've been printing just around an S1, trying to print an R3 at 49,596. That should be pretty much the limits. But the PPMs are in really good shape as far as the trend goes. We're in what I talk a lot about, the trend maintenance mode. Let's go to weekly. And the weekly pattern, I've talked a bit about this as well. It's an interesting, basically what's happening is the moving averages are starting to set up a next trend phase on an intermediate level. And the key, there's two keys in here, 43, 478, 41, 519. If that printed, that would be, I would say that the buy the dip range is 43, 478 down to the 4096 level, and that number is jumping literally around $2,000. So that we're going to see a couple things happen as we come into this coming week. We're going to see the 10 overtake the 40, and then we'll also see the 21 continuing the bottoming phase, and this will set up where the moving averages will convert over into an uptrend mode, and that's where there will be some work to be done, but this is where this pattern will likely start to invert, and we'll see. I don't have the signals or the view right now, but I think we could see a re-challenge of the highs at 64,000 at some phase, but we're talking multiple weeks, 10, 20 weeks, maybe, we're starting to get into fourth quarter before that would happen, but it looks like the process here is starting. Let's go over to Ether. Ethereum has actually been much stronger. This is the weekly. We'll go backwards on this one. We'll just stick with this chart. So we're looking at this thing starting to stall right now in this range. The PPMs are still very positive, plus 4.24. Now anything over 0.25 is bullish or uptrend, and we're talking 4.24, 2.16, and 3.56. So these are very robust trends on a weekly basis, and you've got major support. I don't see us getting anywhere near there. 2580, 2500, that if there was some kind of weird spike, you could literally buy that one blindfold. But I think we can look more at the grid for the downside here, the low 3079, S2 3044. I don't see us printing a S3 2930, but it's certainly possible. And if we look at the upside, we have just been right at R1. So my expectation would be just to stay sideways, consolidate some of this upward move that we had. There was a pretty powerful move here. Even though we were able to close higher, we did get an RTX sell, which set us into a sideways range. And even though it's higher from that signal, we're basically locked in probably one more week of sideways from here. Quick look at the daily. You see this more of this flat configuration right here. 29.85 is the 21 period moving average. It's up, all of these numbers here, up plus 0.48 on ppm1, ppm2, 1.48 and 1.09. So this is very robust trends. So the big pivot number in this pattern is 29.85, going up about 40 handles per day or $40 per day. So that this will, in a couple of days, will be $80, $100 higher than where we are right now as far as support goes. Okay, I'll come up on screen just for a minute. I'm going to get set up to do some of the individual stocks we're looking at. Should be able to finish off, and I'm hoping I can get through as many as 10. I'm going to do some of the classical stuff, but I'll try to get through some of the stocks. I'll look through some of the things that you folks have talked about and see what we come up with. So let's dig into it so we can get through tonight and move forward into making some money tomorrow. We'll probably stick with the weekly charts for the most part, and I'm going to do some of the classical ones, which will be, since Apple's been under pressure, we'll do Apple and Tesla. Those are always on the list, and then I'll go through some of your requests. It's interesting because Apple seemed kind of odd the way it traded today, but we've got all uptrends across the board on the weekly. Major support 145 on Apple. You can grab, if you can grab any 140, any 45 anythings, you're going to be in pretty good shape. The low's been 147.80. That may be it. We're looking at the market grid for this week. 47.07 is S1. So I suspect S1 is probably the downside. Upside right now is right around an R2 number, it's just a touch over it. So most of this range has been done, but the momentum on the upside is still pretty substantial. So let's go to Tesla. Tesla is kind of an interesting, this always comes up, I'm not sure why. So Tesla is interesting because I was looking at this earlier today. And what I was looking at is I thought, man, this thing's probably got one more try to get above some key areas here. And I'm going to call that around 780. And we had some like strong bias. This is the weekly chart I've got up here. I'll go full screen here in a minute. But this setup here is actually interesting because if it fails to get over that 780 level, and I don't know if there's any real timing here. We've got uptrends on all the PPMs, but this next try, a couple areas that you're going to watch for is getting above 730 and then 780. If we get above 780, then we're likely to see the stock move quite a bit higher, maybe retest the highs going back to last November. But it's starting to look less and less like that's a possibility, and we won't know for a number of weeks until we see if we can get through 729, 780, and what type of action we get. So we'll just leave it in that it isn't an uptrend. The key supports around right now 687, 664, major support there. Don't see it getting underneath that level at all from that standpoint. I just don't expect that to happen. So let's go on. I see a couple things on here. We'll do Intel. This used to be such an amazing stock. It's just been a dog for a while. But what we're looking at here is the PPMs are finally starting to turn up. We've been hovering. This is the weekly, so this is a 200-week moving average. We traded below it last week. We're back above it. There's resistance a lot of resistance between 54 and 56. So we're going to need a couple weeks at least getting into that range above 54 and below 56. If we can get in there and stabilize, these PPMs will start to turn up and we might be able to get a rally. But there's just a ton of stock ahead. There's a lot of resistance that it's going to have to get through. So this will be a tough one since we're on this semi mode. Let's go to AMD. AMD is much different pattern. You know, there was a time, I've told this story, and this is a quick one, that going back to Pacific Options Exchange days when I was a market maker on the options exchange, this was a great trader stock. But what used to happen is Intel used to sue them for all kinds of infringements, and the stock at the old days would go to 24. They'd sue them and go down to 12. And anytime it was above 22, you just start buying puts, doing put spreads, doing all the stuff up there, and you'd always get paid to go to 12. And at 12, you'd start layering it up, looking for the 20s again, and it would do that back and forth. It was amazing trade for about a year and a half. And the point of telling that story is AMD used to be the underdog. AMD now makes probably the best chips out there. They certainly, from a speed standpoint, are way beyond Intel right now. They're kind of locked into nowhere's land. And if you look at like the Threadripper and some of these chips they got out there, they're crazy. I think the Threadripper is almost $3,000 just for the chip, but it's insane. I think it's 64 threads in there. So it's pretty amazing. But AMD has become the premier chip company, especially with the shortages and all that. But having said all that, we're now in this consolidation. I think this move that we've seen up, we've seen most of what you're going to see on Intel at the moment. We're going to see some more stabilization. You might trade up toward the upper end of the grid. That's between 110, 116, 116 and 3/4. Right in there is going to be your extremes, but there's not going to be a lot. And on the downside, you're going to be absolute limited to around 100 or so. Right now, the PPMs are all very robust across the board. The 10-pair moving average 98. It's going up $2 a week. So when we come into next week, that's going to be 100. And so you're going to start to get solid support, not too far under where we are right now. You know, there's 5-6% downside, but really I think we're going to be in a consolidation. And then once some of these numbers catch up in the next couple of weeks, we might be able to challenge that little spike high that we had just a few weeks ago at the 122 level. But for now, we're just looking at, I think, a sideways. And if we can get above these highs here in the last couple of weeks, 112.33, 111.50, 60, that's going to be more and not, it might print above there, but there's going to be a lot of resistance just looking at the market grid and the setup here. The other thing I would mention here, those who've been around for a while, this is setting up a dragon head, which usually suggests about 70% of the time is that when this thing gets resolved, as long as certain things happen in this dragon head, then the next move will be in the direction of the previous move, which will be higher. So I don't think, let me see if I can put some Fibonacci stuff up here and just see if we can put up one of my Fibonacci indicators. Yeah, there's nothing out there. I was just seeing if there was anything out there, and there's nothing out there on this one. Okay, so where are we? We're 55. I'm going to do two more stocks. Just looking at some of the stuff that you folks talked about. I think Amazon I can do real quick. And Amazon's really not the old dog it used to be. The FANGmans have been kind of under pressure and locked in this range. We can go all the way back to August of last year, and we really can't get it out of its way. There's a lot of distribution going on here in this stock, and it just doesn't have any. It's, in fact, on a short-term basis, there's a lot of resistance right at major resistance 34.32. We're trading 32 98, but you also have resistance again at 33.75, and these PPMs are just not in a favorable position. So let's do some of these that I'm seeing on the screen. This is CrowdStrike, and we're definitely working on an RTX sell signal. The PPMs are very robust uptrend. We kind of had that dragon head formation. We followed through. What we're probably going to end up with, these are pretty robust numbers. We'll probably end up staying 255.52 is going to be major support here. It's really kind of tough to call this. Let me just see if there's any Fibonacci crazy numbers out there that this pattern has generated. Nope, nothing out there. In fact, 271, right where we're trading right now, is the extreme high target out of the Fibonacci. So we basically satisfied this, but overall this thing looks great. So I guess if you own it right, you definitely no reason to sell this stock. And what we're likely to get is a couple weeks sideways on this one. So we'll do Taiwan Semiconductor. I believe they are coming to build a plant here in Arizona. Obviously, a bunch of these semis are starting. Let me get rid of the, just real quick before I get rid of the Fibonacci, there's 127, 134 looks like a valid projection here. But looking at this, we're trading right at the resistance levels right now. Trading 117.03, 117.40 is decent resistance, but if we look at the PPMs, they're starting to try to turn up. So there's a potential here for this to start to go up, and the key levels are going to be this high back on 716 at 125.78. That will be big. But overall, it's positive on a short term, neutral in the middle, and there is an underlying support line right at that at 113. So it's kind of a mixed picture. Don't see any big acceleration, but the key number is going to be getting above that 125.78 number that we printed a while back. Yeah, so I'm doing VAIC. Somebody requested. What a piece of junk. Yeah, don't know what to say. But there's very little that you're going to be able to get out of here. Is it cheap on a relative basis? Yes. As far as any trends going right now, not really. There's more work to be done in this area, and I've just put it out there. That resistance 46.49 is big resistance. There's more at 41.20. There's just looking at the market grid. There's just a ton here. It's pretty much a trendless type market. Well, folks, I tried to get through quite a bit. I wish I had time to do some of the long live streams I used to do. I did do two a couple of weeks ago. Maybe next week will look more promising and we can get back and do a couple of those. There's just so much more I get to do during that time. So thank you so much. We're right at about 55 minutes. I want to make sure we get done. I don't want to go any further than that, but I really appreciate it. Tomorrow night is going to be big. We'll have a setup ahead of the big Powell meeting and Jackson Hole, and we'll have some other metrics to look at that come out tomorrow. But like I said, in summary, I don't see any big moves tomorrow ahead of the Jackson Hole meeting. I think everybody's going to be on hold. And even then, we're not going to have a lot of those numbers. It'll be Sunday night and Monday where most of the reaction is going to be to that. Anyway, folks, thanks for watching. I really appreciate everybody coming, and have a great rest of your day and a good luck trading tomorrow.